Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and try to help you to understand and navigate how the tax system and the tax rules apply to you individually. So today I'm going to talk about how much tax you can expect to pay on your interest. And before I do, if you are new here, please do take a moment to subscribe to our YouTube channel. That way you can easily refer back to this information if you need to, as well as being able to access other information that we have on a whole host of different topics, all aimed at you being able to navigate the tax system as it affects you as an individual. So back then to interest, how much tax can you be expecting to pay on your interest? So of course, we're talking about taxable interest. So if you have money in an ISA, for example, that's not taxable and that doesn't need to be reported to HMRC. And we're talking about general interest that you receive from your investments or even from your regular day-to-day bank accounts. How much interest can you be expecting to pay? And just to note that most of the banks these days will be paying the interest gross, and that means that no tax has been deducted. If they are paying your interest net, then it does mean that they have deducted the tax at source. If you're not sure, then you should ask your bank to clarify this, because of course it's important that if you don't need to pay the tax on the interest and it has been charged, that you get that refunded from HMRC. And conversely, if the tax hasn't been deducted, but you are liable for it, then that you do notify HMRC of that. And also to note that if you have a joint account and interest is paid on that, it will be split between the parties to the account. So if it's a joint account, two people on the bank account, then all of the interest will be split 50-50. You can't apportion that as how suits you. It's split equally between the parties of the account. So let's just talk through how much tax that and when you'll be liable for that. Because this isn't as straightforward as with lots of things tax as it perhaps used to be. So ultimately, as we've talked about in other videos, tax in the UK is cumulative, and that means that we add together all of our income from all the different sources, from our employment, from our self-employment, from dividends, from sort of property income, from any sources that we have income from, and the total of all of those defines our tax band, that the maximum tax that we would pay. So basically your savings interest would be the same. It would just go into that pot, and anything that was taxable would just be taxed at your top rate. So if your total income, including your savings interest, kept you within the standard rate allowance threshold band, then you would pay 20% currently on your savings interest. And if you were in the high rate tax band, then you would pay 40%. And if you were in the additional rate, you would pay 45%. So whichever the highest rate of tax that you're paying is what you would pay on your interest. But you do have some potentially have some allowances unless you are into the additional rate threshold. So if you're into that additional rate threshold, which is currently just over 125,000, then all of your interest will be taxed. You'll have no allowances, no exemptions on that. Everything will be taxed. If you are within the a basic or the standard rate, 20% tax band, then the first £1,000 currently of your interest, it will be covered by your personal savings allowance. So this is almost like you get your personal allowance for tax overall, and this is an additional and separate allowance for just specifically for your interest. So if you earn within the 20% tax bracket, and you have less than £1,000 of interest, then you wouldn't need to pay anything on that. If you are in the higher rate, so the 40% currently band, then it's the first £500 that's covered by your standard personal savings allowance. So again, that's separate to your sort of general personal allowance. It's specifically a personal savings allowance. So again, just to cover that, if you're within basic rate tax, you're paying tax at 20%, then you get a personal savings allowance of £1,000. If you are in higher rate tax, you get a personal savings allowance of £500. And if you are in the additional rate band, then you don't get any personal savings allowance. So that is a set amount, depending on your band, of the first amount of interest that you won't have to pay tax on. And then above that, you would pay at the prevailing rate. But then also, and this does seem to cause quite a bit of confusion, we have the starting rate for savings, and this confuses people because they're not always clear when they will get this. So currently, the starting rate means that potentially you can have up to £5,000 of interest without having to pay tax on it. And basically, this is if your total income is under 5,000 above the personal allowance. So currently, generally the standard personal allowance is £12,570. So if your total income, including your interest, was under 17,570, then you would be eligible for that starting rate for savings. So the maximum benefit that you could get from that is if your personal general income was £12,570, and then exactly you would use up all of your personal allowance, so there would be nothing left. Remember that you've already got the £1,000 as a standard rate taxpayer. You've already got your £1,000 personal savings allowance. But if you had £5,000 of interest as well as your 12,570 of income, then you would be allowed that whole £5,000 interest tax-free. Now, just to say that the personal savings allowance of £1,000 gets utilised within that. So if you had £12,570 of income and £6,000 of interest, then you would get the £5,000 starting rate for the savings, and you would pay tax on £1,000 of that income. Now, of course, if your income is lower than your standard personal allowance, or perhaps you had more interest, then that would be covered by your personal allowance anyway. So if you had no other income and you had £10,000 of interest, and that was all your income for the year, then as long as there was no reason why your personal allowance was different to the standard, then that would all be covered within your personal allowance. So the 5,000 starting rate for savings is only available if your income is £17,570 or less. So once it's above that, it's not applicable anyway, and then you just have your personal savings allowance. So hopefully this helps to clarify what allowances that you are allowed for tax and what rate. So once you've used up all your allowances and you're above the starting rate for savings, then basically your interest is taxed as your income, and at the prevailing rate, and that obviously will depend on you as an individual, what your other income is, as into which band that will fall in. So if you're paying tax, high rate tax, then you'll pay high rate tax on your interest. If you're paying in the standard band, presumably, as long as your interest doesn't push you into the high rate band, because that can cause a little bit of confusion as well. If your total income without your interest is quite close to the high rate tax band, and then the interest pushes you over anything within that high rate tax band, you will pay high rate tax. And the same if your income is higher than that and you're the same, you're quite high in the high rate tax band, and it pushes you into the additional band. So this is all obviously important for you to be aware of, because when you're deciding where to put your savings and how much interest you're going to get, it is important to understand the tax implications. And of course there are various options to be able to put your money in tax-free investments or savings. And of course, if you're not sure of these, then you should always seek advice from a professional. If you are asking advice from somebody, then do check that they're qualified to give the advice, that they're a member of a professional body or licensed if appropriate, and that they have indemnity insurance. So hopefully this helps you to understand. And as I say, if you break it down into what personally your income tax band your income falls within, then you look first at how much your personal savings allowance is, although you don't get any personal savings if you're in additional tax rate band currently. And then if you have income of less than £5,000 above the personal allowance, then you should also look to see if the starting rate for savings applies to you. So thank you very much for watching, and please do take a moment to subscribe to the channel. Thank you. Goodbye.